I want to talk about data centers
Okay.
for a minute, because I think you, with your, are you active in that space? Everyone's talking about it. It's the new hot thing. Tell us what you think.
Look, there's no doubt that the electrification of America is escalating, whether it's electric vehicles or data centers, or the demand for electricity is growing, and the demand for AI and all the processing. And you've heard the statistics that ChatGPT search is X times the amount of bits and bytes that a Google search is. And then there's no doubt that the demand curve is up and to the right. And at the moment in time, there's a bit of a feeding frenzy going on in America by both the hyperscalers, right, who want these data centers built for them, and for power to provide the hyperscales. And in response to that, the capital markets have looked up and said, that's the next new thing. That's the growth area. I don't know what the number is, but there's probably over $1 trillion of capital in the United States between private equity, infrastructure firms, real estate firms, at least chasing this opportunity. And what I worry about, because I've seen this multiple times, look at what happened with life science in the last craze, right? All this capital chasing what is, at the end, a finite opportunity. So I think there's going to be some great opportunities, and people are going to make people are making a lot of money, and people will make money.
Are you doing it?
We have, I'll answer that in 1 second. And so I'm worried, right, that this at some point, I don't know if that's 3 years from now or 9 years from now, but at some point there's just going to be a lot of unfulfilled promises that aren't met and a lot of capital. But during this phase, right, it's the go-go days in the marketplace. And because of what I think, I'm very careful on this topic. That being said, as a reminder, we have a large industrial development company. We have, over the past 4 years, acquired dirt that we were going to build warehouses on, and found out, right, kind of almost after the acquisition, we get power all the time.
Sure.
But realize that, oh my goodness, we can get, whatever numbers, lots of power to this building, to this land, and therefore we have not personally developed the data center, but we have sold the land into a data center development project, right?
And what I hear from people whether they serendipitously fell upon that or have been out in that business, that's not a typical real estate 2X or something. It's like a 10X.
It can be.
Yeah.
It can be. It all depends. It really does depend. But yes, it is multiples of what the land is worth for distribution or fulfillment. So that kind of sparked our attention. We happen to ourselves, for 70 years, own land that happens to be located on some adjacent to one of the most important data centers in the world. And that land is very valuable. So we're working that land today. But the business today is all about access to power. And so we're very focused on that. We didn't chase that land. We didn't buy it. We're not in a craze for it, but we have it. And we're in the process of securing the power. And, knock on wood, if we do, we will be in that business in some very unique land in the United States.
Right. That's awesome. Good for you.
Yeah, it's,
If you work hard enough, you get lucky.
There's enough unlucky things that happen in life. Like, how about once in a while you get something lucky happening?
Touche. Well, everybody's asking the question. I'd love to get your take on this. Have we turned the corner of this downturn? So obviously, 500 basis points in a rise in interest rates have caused a huge slowdown in the real estate volume of transactions. People are worried about the value of the things that they bought in the last few years.
Yep.
Are we now have we turned the corner, and you see transaction volume starting to pick up, and what's going to happen to, some of those assets that may have been purchased in the last few years that will they recover?
Yes, we have certainly reached an inflection point in the market in terms of the capital markets, undoubtedly. And then we should talk about operating fundamentals, because the capital markets lead the operating fundamentals.
Right.
But it's no doubt transaction activity's picked up, right? Sentiment has changed, right? People are investing. People like us, we were really on the sidelines for 22 and 23. This started January 22. I mean, it was clear as day. Interest rates moved in January 22. So we've been in this for 2.5 years. But it turned, in terms of sentiment and capital markets sentiment, it turned this summer.
Yeah.
I mean, it literally just turned, because remember, last December, you had the 10-year went to 3.9. There was this little bit, or November, though, there was a little bit of euphoria.
It went to 3.7 at one point.
It may have.
Yeah.
It may have.
Yeah.
And then it spiked back up, and this malaise that took place in the marketplace in January and February was,
so depressing.
People were like, enough. And
right.
I remember...
And everybody was expecting a rate cut in the first or second quarter, and it didn't happen.
Didn't happen. And I remember in May, people need a break. I could just tell. I was like, this summer, people should take... At the market. The market needed the summer. Yeah. But somehow during the summer, the capital market sentiment shifted, and the grease is starting again in the business and the industry. Now, the underlying investors, the CIOs of the underlying investors, they're still looking at the negative performance in their portfolios. Mm-hmm. And in terms of new allocations from them into the sector, that remains delayed. But the people who have the commitments and or the direct investor, right, they're active again and participating in the marketplace. And I would presume, assuming that we have, positive performance, that the underlying investment capital will begin to be allocated positively in 2025. I think 2024 in terms of fundraising is like the worst year since 2012.
It is. That's true.
And the market was half as big in 2012?
The market was even less than half.
So on a relative basis,
it's dry powder, the $300 billion of dry powder that we have today, that's in the U.S., is bigger than the entire market was in 2012.
So that just exacerbates how bad fundraising has been.
Yes. Right? In terms of total dollars.
In terms of total dollars. Right. So, but I think that will turn because I think it lags, right? Those fund flows lag what's actually taking place in the marketplace. In terms of challenges or problems that people have, again, it completely depends upon what you own, right? If you bought a really good industrial building at the height of the market and you paid a 3.5 or 4 cap for it, you just have a valuation issue. Right. And hopefully you've absorbed it by now and you get to move on. If you were actually developing during that period of time, rents have run so fast.
Yeah.
So if you underwrote in 2021 yield on cost at a 5 cap, right? I'm just making up, but let's say that was the market. Yeah. And you're leasing it today, you're probably leasing it at a 6, 6.25, 6.5 to a 7. And so you've actually...
You're right in the money.
Right. Yeah. Even if you, at the peak of the market, did industrial development, you're making money. So if you bought it, you've lost money. If you've developed it, you're likely making money or certainly breaking even. It's a very interesting dynamic when people talk about risk.
Yeah.
The risk was to buy the stabilized asset.
Yeah.
The risk was not to develop it.